So welcome everybody to Market Insights. This is our monthly market stats and dive in a little deeper. That's why we call it Insights. It's not just where the market is, but it's where the market is going. And as always, we are joined by the fabulous Scott Kiburz, who is the Vice ARMLS Chair, who brings all of this good information to us, but then breaks it down, breaks it apart, and puts it into bite-sized pieces that we can take out into the real world. So with that being said, Scott, take it away.
Let's go. Let's jump to the first slide and get going, ladies and gentlemen. Thanks for being on today. As just a data point from HUD nationally, April is the fair housing month of the year. Please don't forget, HUD has great insights at your disposal, at your fingertips to give guidance and insight for your buyers and sellers. So please know that April is Fair Housing Month. Sarah? This is numbers that we had as of the 1st. We had 3,030 listings on April 1st, 7674 sold, up 16% from a year ago, and under contract at 10,721. So that's a real number. Ladies and gentlemen, since the 1st to today, we did tip up to 3,700 homes, and we're back down to about 3,100 active homes as of this morning. Just a data point. Sarah?
This is not under 3,000.
We didn't quite dip under 3,000. So, ladies and gentlemen, if we just did one slide today and stop, what I'd like to get for you is what I'm going to call fast facts. And this is just some insight about our market on one sheet. At the bottom where you see Landmark title, please know that Landmark is generous enough to put your own banner below that if you wanted to market that out or send this to a specific, oh my, okay. We missed one. We missed one greatly, okay? But put a banner at the bottom of this for your clients. So on this particular fast facts slide, we're off just ever so slightly. 3421 active, 6873 solds. The absorption rate, not 140, not 140%, ladies and gentlemen. Ladies and gentlemen, our absorption rate soared to 272%. 272%. Coming soon at 6:30. Interest rates 2.75 to 3.5, up ever so slightly. Average sale price 459, 355. Ladies and gentlemen, that has surged 20+% in the last 12 months. Biggest thing on this slide, and we'll get this changed before we send it out to you, 272% absorption rate. Put texture on that, ladies and gentlemen. A traditional balanced market has a 20% absorption rate. If it favors the seller, it tips to the favor of the seller at 30%. Imagine what happens benefiting the seller when it goes to 272%. Sarah, next slide, please.
270, that's
272.
Honestly, I looked at the 149 and I was already like, ugh. I was already cringing from that. And that is so much more cringeworthy.
That was so 60 days ago.
We'll get that updated though. And if you'd like a copy, we'll get that to you with the huge cringeworthy 270 number.
Yes, thank you. Next, please. So ladies and gentlemen, this is just a quick graph just showing the median and average sale price. And what this is illustrating is that across the board, homes are selling for at least 101, approaching 102% of lists. We have just some quick texture. We have 0.22 months of supply of inventory of homes priced between 2 and 300,000. We have 0.22 months. That's like a week, just over a week. We have 0.28 months of supply, 3 to 500,000. And then we go all the way up to $100,000 priced homes that are still selling above asking overall. And that's what this graph is illustrating. We have pierced the average north of 101%. Sarah? This is just illustrating, if you go back to the pandemic in April or March, April last year, we were trending slightly up in March. We leveled off and actually dipped in May, and that's due to the pandemic. But this slide is, I include this slide for you so you can see visually the sheer rise in the median and average sale price for all of Maricopa County. And that is reflective of our entire market in the last 12 months, starting from basically April of last year, where we were basically leveled off, to today. Next slide. Visually, ladies and gentlemen, and what we were talking about just prior to the launch of the meeting is the number of listings that we're adding on a monthly basis. We're still getting 9,000 homes. But what's happening is our inventory is down 65–70% overall throughout every major city. And when that happens, how we do business is different. You know, it's very common for somebody to do an open house over the weekend, or open the house up for showings on the weekend and present offers Monday afternoon and make a decision Monday night. And if they're going to do a multiple counter offer, they'll do that Monday night and have it locked in by Wednesday the following week. That's kind of the market of the moment. And educating your buyers as to what you're prepared to do to win, and you know, how to leverage against a cash offer, how much over asking you're going to have to waive appraisal. All these conversations come into play. So I come back to this slide and let you know, in the big blue numbers, our active listings on the 1st was just 3,009 active listings. Our under contract 10,131, and sold 8,201. But the second line, new listings 8,889. Oh my, we're still adding inventory. It's just in a less traditional way. Next slide. So what I wanted to give here is just some quick insight as to what's happening in our metro. And the Phoenix Business Journal noted that the Taiwan Semiconductor Factory in North Phoenix, up by Ben Avery shooting range area, they picked up an 1,128 acres for around $65 million. They plan to spend as much as $32 billion in tech semiconductor industry in North Phoenix. At the same time, 30–40 days ago, Intel posted they're spending $20 billion down in Chandler to build a new fab factory plant down there. So big money is coming here, great industry. And what Phoenix Journal is saying is we're becoming a national hub in the semiconductor markers. So just a great way of doing things. On some good news, United Way donated $25 million gift to, received a $25 million gift from an Amazon executive. That was the ex-wife of Jeff Bezos, who just spread many millions and millions of dollars throughout the nation quietly. And United Way got a $25 million gift that they weren't planning on. Something is local and granular. Down the street from my office is Buck and Ryder on 44th and Camelback, and just know they're going north to Scottsdale. Biggest thing right now in housing from a trend is the multi-generational housing, where you have basically a mother-in-law or an in-law quarters in the same roof line. You've got multiple generations of families living under one roof. And that is one of the highest growing, it's been around, but it's getting even more traction today. Next slide, please. Just a quick visual, ladies and gentlemen. This is the new homes built last month that closed. And Phoenix had the biggest, in Litchfield Park. I highlighted that one at 74. Litchfield Park as a community is very small compared to Phoenix, and yet they had 74 homes close last month in that corridor. There's a lot of activity going on out there with Luke Air Force Base and their expansion. So just a quick data point is where new homes are being built and closed. Sarah? Some quick insight about lumber. So we all have heard these horror stories, how lumber prices are up 100+%. And why is that? This infographic is from John Burns out of Santa Monica. And it just does a great job of talking about there was a financial crisis in the late 2000s and some things shut down. We had fires, the pandemic hit, people were slow to restart due to the pandemic. And please know that here today, there's approximately 6 new mills starting. But if you've seen a huge spike in lumber prices, or I can't get plywood to cover the frame of my house, oh my, that's real. It's affecting construction. And then on a sadder side note, I've heard so many horror stories about, I had this wood delivery arrive today and it was stolen that night. So people, how they protect that has never been more important. Sarah? This is the ripple effect I call of what's happening to various markets. So think of basketball tournament or football areas, the Southeast Conference, Western Conference. So in the Western Conference, top right in the slightly red, some of the benefiting cities of growth would be Tucson is to Phoenix and Fort Collins is to Denver. In the Western Conference, what they're saying is, people come into our marketplace. They would like to buy, I'm making this up, a 3-bedroom, 2-bath home with a 2-car garage with this fit finish, and I have a budget of X, and I can't find it in Phoenix. I choose not to go down to a townhome or a condo for that. I all of a sudden pick up stakes and put my search not just to Phoenix, but all the way down to Tucson as far as an alternative. And so in this example, some ripple effects of growing home prices and workforce, Tucson and Fort Collins in the West. Thank you. Go ahead, Sarah.
That's a great slide, Scott.
It tells a lot. So ladies and gentlemen, all of Maricopa County, our active listings are down 71%. Boy, wouldn't we love to go back just 1 year ago when we had 10,481 active listings to choose from? Doesn't that seem like a huge buffet of choice? It's down 71%. That's the blue icon. And solds at the same time we're down, we're up 11% from this time a year ago. Median sale prices. This time last month, we said, hey, it's a hard, easy number to remember. At the end of February last year, beginning of March, or I'm sorry, last month, we were just at a 20% appreciation Maricopa County wide. Today, we're at 21.3 Maricopa County wide appreciation of home prices. Our monthly supply is down 74%, and our days on market, everything included, just 22 days of inventory. Wow, that's Maricopa County in one page right there. Sarah? What I wanted to give just a little bit of flavor. Now, again, everybody knows that clearly not all rentals are in our MLS. They can be. ARMLS is one of the biggest MLSs in the nation that will let you put in rentals. Only about 14 to 18% of the MLSs on a national stage allow for that. But this right here is just basically showing you great trends. This is the trend of rentals. And in yellow, they're up 16.3% from a year ago. And if you have 1,000 square foot rental, just know the average rental rate right now is $1.21 per foot. So 1,000 square foot property is going to rent on average for $1,200. We know the closer you get to the central part of Phoenix, that number goes up significantly. Sarah? Okay, ladies and gentlemen, these are what looks like primitive graphs, but please know they're packed with knowledge. So this is a visual on new residential listings by month going back to March of 2018. And then there's a number basically at the end of every month, basically, of where we're at. So we go all the way back to March on the far left of the graph, March of 2018. We had 9,985 new active listings that month, March of 2018. And traditionally, March is one of our busiest peak months of adding new inventory. When you get to the middle 2/3 of the graph, you're going to see the pandemic effect. We had a little blip in our heartbeat there. But March of 2021 is the far right graph. And so we had 8912. So we had basically 1,000 fewer listings this March than we did 3 full years ago. So our market from that point is very similar in the grand scheme of things, especially as we're pushing through hopefully towards the end of this pandemic season. So listings are coming, ladies and gentlemen, but if you're a buyer's agent, how we work with them is completely different. Next slide, Sarah. Under contract, ladies and gentlemen, we peaked March of last month for the last 3 years at 12,876. So as a broker, I say, hey, the work is getting done. Go to a title company. We're having record months. Under contract means we're getting to close, right? There is record sales happening. Next slide. Closed, we're at 85 or 88.52 last month. We've had a little bit of traditional dip in January, February. We're slingshotting out of December and January, February. We haven't had peak like we've had in June of 2020, or in this case, April, May of 2019, where we hit 10,000 homes. That's a lot of business being done. That's billions of dollars being done. But we came out of whatever the January, February trough of closed units has been, and we sold 88.52 last month. So business is getting done. Next slide, Sarah. Here's the drum roll. Here's the drama. Here's the, oh my God, how are we doing that? Go back to March of 2019. We had 15,000 active listings. This graph represents active listings. 15,000 to choose from in 2019, March of 2019. And basically April 1st, we had 30,300. So that is that. Am I still on, Sarah? We still doing okay?
You're good.
Okay. All right. So now that is a realistic visual of the decline in the last 3 years of our active listing inventory. Next slide. Ladies and gentlemen, here is the absorption rate, 272.13. So when you look at 3/4 from left to right in the red, the bar graphs of absorption rate, that is all under 100%. We got into June and we went over 100, and then this past March, that graph had to get recalculated completely. You see the number 240, we're at 272.13. We are reaching in not only to next month's inventory, but the month after that's inventory to close business. Next slide. So ladies and gentlemen, we're about 7 minutes from getting done, but I just wanted to let you know granularly. I don't know if you would ever show this to your buyer or seller, but for the people online, what I would like to show you is the top graph in green bars is the active listings, and right below it is under contract. And so the green bars represent the number of active listings going back to March, and you can just see as you move left to right, our active listings are way down in terms of total number. It's barely over 2,000, below 4,000 in this case. But at the same time, the very bottom under contract in green, you can see visually how many homes are under contract in that effect. Business is getting done. It absolutely is getting done. We are bidding over, we're waiving appraisals. I've heard stories where I'm the buyer's agent and I'm grateful for having my offer selected. I have a $5,000 earnest deposit on the home. There are buyers out there that have offered to release half of the earnest deposit upon contract acceptance, so that seller, if they needed to do any repairs, if they needed to put a down payment on their next home or have some cash free up until they get closed, that it's showing commitment by the buyer. We're all in. We got skin in the game to the point where we're releasing a portion of our earnest deposit at contract acceptance. Then if we have an inspection, if we have an appraisal, that money's not, and we cancel for whatever reason, that money's not coming back to the buyer. That's how committed people are. Next slide. So again, visual here, I tried to do a lot of things with this one graph. On the top 1/3, it's showing price point and the number of doors that are currently available in that first column. Between, well, in this case, 3,370 total active listings, and then by price point, how many doors in that price point. Then we have a pie graph in the middle 1/3 that shows it visually, and then the bottom 1/3 shows what it looks like as a percent. And so please know, between 200 and $1 million, basically 100% of those homes are averaging over asking. Sarah, we're almost done. So this next one is by square footage, and it's just showing the current number of homes by square foot versus by price point. Same type information, just a different way to look at the data. Sarah? This last one here, active listings by square foot, and it's just showing the increase. If you take the top 1/3 in square foot in the gray, and you look at the far right, you can see the percent of home price increase in active listings have gone up 29%, 28%, 31%, 48% in over 3 million or over 4,000 square foot homes. That is the active listing increase. Then the next one down is under contract increase for the last 12 months. Sarah? And so then when we break down the under contract listings here, again, it's pie graph. This is granular data. I invite you, when you get this information on your own, is to study the trends by price point and square footage, and it will tell massive stories for your seller and for your buyer. There's a great phrase we use a lot here at KW: you can have reasons or results, and you can't have both. And when prices have gone up dramatically, some say that Maricopa County went up as much as 3% just in the month of February this year. And all of a sudden I'm priced out of a home, but I really want a private pool. Maybe I have to get a community pool. You have to have reasons, results, and adjust. Sarah? This last one looks at sold. Same type of data, but this is going to trend where the solds are. And so when you get down to the bottom 1/3 in gray, and you start looking at $500,000 to $700,000 dollar homes, you're looking at a 55% increase in a year ago. Just breathe into that. It's up 21% for the quarter. The market changed before our very eyes. Next slide. Sold price range, what we're looking at here is sold to list and sold to original. And so anybody out there, Sarah has these slides, and we're happy to have you receive them if it helps you in any way. So Sarah will get those to you. Next slide. Again, I like to look at the dials. I think of speedometers and a fast track car, race car. To the far right, the 3 dials, we have very low inventory. When you look at seasonal adjusted demand, it's at 78, 79%. It's not peaked at 100. Ladies and gentlemen, we're not any higher because we're not closing that business. We would sell more homes today if we had more homes available. We're still selling at a record pace, but our demand in a local market, some say there's at least 5 buyers for every home. Others say there's at least 10 buyers for every home in our market. Somewhere in there is probably truth. Seasonally adjusted supply demand, we're just at 0. And what I'd like to invite the audience to look at is in the bottom left, months of supply absorption rate. And you see the black and green line cross over, and the top black line surging like it's never surged. That is our absorption rate versus our supply. That's a great visual as to before those 2 lines converged, going to the left, that was traditional real estate for several years. Got in the business. This is what I do. This is how I do it. Oh my, in the last 120, 180 days, our market has transitioned, and how we help buyers and sell real estate absolutely changed. And so how we need to serve our clients has changed. Sarah? Now we're turning for home. I'll slow everything way down because I know we're basically at time. But Sarah, what you're seeing here again is a summary of all of Maricopa County. The next slide will then begin an alpha all the way to Tolleson summary of like 18 to 20 cities and what's happening in your local markets. And so hopefully there's something in there for everybody in terms of a trend, an infographic. And then please know this tool, while it's just in the cities, can be drilled down into a zip code. So Phoenix having multiple zip codes, you can get very specific with this tool and look at the market of the moment. Comments right here really quick. Jobs came back last month, best month we've ever had since August of last year. And Sarah, let's land on this next slide and we'll shut it down. This is from the Wall Street Journal on Saturday. And so this is a national commentary, but I thought the words they used were very valid. For buyers, bidding wars await. I think if you're working with a buyer, that's a great way to set an expectation. Prices are rising, there's stiff competition, and there's a lot of difficult decisions that have to be made and decided on as you get into the trenches and go try to find a house that's yours. If you've been thinking about buying a house, you're not alone. Wow. And Sarah, you and I started this conversation. Is the pandemic, when it's over, is it going to have an impact? Is the bottom going to fall out? I think our post-corona, Scott Galloway has a book called Post-Corona, Post-Coronavirus. I think our market in our local economy, our national economy is forever changed as a result of this. The pandemic just sped things up in its impact. And so I don't see us going back. Sellers, make the most of the scarcity. It's easy to sell your home. And if you're one of the 50% of the sellers that doesn't need to buy another home, celebrate your win. If you're the other 50% of the sellers that need to become a buyer, put together a master plan to help you take yourself out of home A and into home B. It can be, I'll summarize right here. It's heartbreaking for the buyers and it's celebration for the sellers. That is all from the Wall Street Journal last Saturday. And I just thought they did a great job of articulating the marketplace today. Sarah. Oh, and tech frenemies. I just thought that was interesting. These are multi-billion, trillion-dollar companies, and those 5 companies have a lot of influence in our national global economy.
Yeah, and we're seeing it out here too, in Phoenix.
100%, 100%. If there was a question or two, Sarah, we would take it now. Thank you for getting these slides out to those that want that. And please make an update on the absorption rate at 272.
Yes, that one is already in the works and being ordered. Thank you, Beth. She's always great and on it. If you would like a copy of these slides, they are available after. So put your email, particularly if you logged on as Scott Kiburz, make sure that you put your email into the chat window so that we know that, that you would like a copy of these slides. Everybody else that attended, we have your emails, we can send them out. But like I said, if you particularly logged on with Scott's link, please put your email so we can get you a copy of those slides. They are great information to have. Also, let us know if you'd like a copy of the branded Fast Facts flyer. We would be happy to get you all the good stuff today. And as always, thank you to our business development management team. You guys do a great job. We actually, I just realized now, we have added quite a few to our team since this last slide was made. I'm going to have them update that as well. But as always, thank you, Beth, Becky, Melinda, Mary, Zach, Patty, Michael, Jessica, who is our new Scottsdale rep, and Eric up in our Las Vegas office. Thank you guys so much for inviting everybody on today so that they are empowered in their business. And as always, thank you to Scott Kiburz for coming on, giving us this great information and just really helping to prepare us to get out there and put our best foot forward. These are different times. Like we said at the beginning of the presentation, this is a market unlike any one that we have ever seen anywhere at any time. But guess what? Here in Phoenix, we are the leaders in that trend. So be out there. Remember that you're the leader. You are leading your clients. There is some water to drink, but you've got to get your little, watering stick out there, and you've got to go and find it and just work harder than everybody else around you. But I know that you guys can do it. So thank you, Scott, for coming on, giving us the information and empowering us to do what it is that we all do best.
Happy to help. Good day, everybody.
And thank you to Landmark Title for allowing us to bring you this great information once a month. It's usually on our second Tuesday. This month was a little bit different because the first Tuesday of the month. This month was a little different because it was the first, and we don't have our stats on the first ready to go. So thank you for bearing with us and coming this month on the second Thursday. We'll go back to the first Thursday of the month next month. And while you're out there finding that water and digging for your clients, please think of Landmark Title on your next contract. We have 6 offices across the valley to serve you. So wherever you're doing a deal, we'd love to be handling your title and escrow for you. And with that being said, everybody, have a great rest of your week.
Thanks, Sarah. Bye now.
Thank you, Scott.